All right, on today's podcast, we have Jamie Catherwood. He is the creator, author, publisher, every handyman of Investor Amnesia, which if you haven't checked out, you absolutely should. It is now one of my favorite publications. It's basically everything about the history of finance. So in the description of it, he says, history is an invaluable tool at investors' disposal. The goal of Investor Amnesia is to provide investors with key insights and lessons from our past in order to avoid repeating the same mistakes. What else would you add about Investor Amnesia, Jamie? It's great to have you on.
Thank you so much for having me. Yeah, it's definitely the one-man operation. I felt like one of those guys that puts like CEO on LinkedIn of their one-man company. It's like, are you CEO? Like,
Technically.
Yeah, exactly. Yeah, really excited to chat with you today. And I think you nailed everything about Investor Amnesia. Increasingly, I'm trying to turn it into the kind of one-stop shop for everything financial history. Soon, I haven't talked about this yet, but there's going to be a data library on there where there's going to be the new home of like kind of a bunch of free financial history data, stock returns from like 1600s, 1700s, 1800s, et cetera. And there's a weekly newsletter you can get where each week on Sunday morning, I send out kind of 5 articles about financial history and then tie them all together into a kind of broader historical context and narrative for whatever's moving markets that week, which has been actually interesting during COVID because it's kind of just been the same theme for like 2 years now. Like everyone is speculating and things are crazy, but like it's weird. I don't know if that's ever happened kind of before in recent times where it's like really the same story. I really struggled last summer with Sunday reads. It's like I've written about speculation like 50 times, and like Robinhood and Wall Street Bets is doing the same thing I wrote about like a year ago. And so it's just a weird time to write, but there's always more to learn from history.
Yeah, so I definitely want to get into what you make of everything going on today, as you clearly cover it. But the data library, that's interesting. So how will people be able to access that? Is it like a database that people will be able to query, or just?
It'll be like very kind of simple. It'll be a table that you can on my website. It's not live yet, but I think I have like 50 data links or something now, and I want to get up to like 100 or 200 before I launch it. And it's just going to be a table that you can filter, sort, et cetera, by category, time frame, and like geography. So just pulling data from a bunch of resources that, as a financial history nerd like myself, I have come across. And so I kind of know where this data is freely available. And so I feel like people who don't want to spend as much time going through financial history stuff as I do and just want the data, I can provide a good kind of aggregated source, just linking out to all these different resources available for free.
Yeah, so you said data nerd or history nerd like yourself. So what really got you interested in this?
I don't know. I've like always been interested in history. Even when I was little, like I don't know, when I was like really little, like I like loved playing with like knights and stuff when I was like, in preschool and stuff. But that was my thing. I've just always loved history. History definitely runs in my family, particularly on my dad's side. And there's actually one really cool story of, I don't know what it is because it's fairly down the line, but some ancestor of mine named Frederick Catherwood in the 1800s, and my middle name's Frederick. He is like credited with rediscovering the Mayan civilization. So I don't know if you've seen The Lost City of Z that came out like a few years ago or heard of it. That was not his story, but it was basically the exact same concept. I think that was for the Aztecs or something. But in the 1800s, obviously people didn't know what was across all corners of the world like we do now, because just, we have the technology and transportation capabilities to pretty much know where everything is on Earth. But in that time, that was not the case. And he and this American architect, John Lloyd Stevens, went through, it's called the Yucatan, but it's in like Latin and Central America. And when they were going along, they came across all these like ancient Mayan ruins, and the John Lloyd Stevens guy, he wrote about it and they published a book together. But my grandfather, or not grandfather, but some ancestor, he was in charge of like, he did these really insanely detailed illustrations, like lithographs, like the most detailed things you've ever seen. They're so detailed that when he brought them back to London, and they said, look at all these like innovations that we thought the West created, there's evidence of these Mayans doing it way further back, and people had not heard of this kind of like Mayan civilization, et cetera. So him and John Lloyd Stevens are credited with like rediscovering it. But because of his super detailed illustrations, they were able to like decipher like the language and like hieroglyphics, and like people who studied language, like linguists, were able to like figure out the Mayan like language system because of like how detailed all these things were. But all of that to say, in a long-winded way, history has always kind of been in my family, but my story is not as cool as traversing jungles and it's some wild stories, getting like held at gunpoint by like people in Central America, and what are these two white guys doing coming through our town drawing statues?
Right. Yeah. Well, it's in your blood. Clearly. I mean, one of the things that really has impressed me is basically like the old cartoons that you've been able to dig up. And actually, like, I went down a total rabbit hole while doing research for this podcast of like Reddits on, because I would just like search Google for whatever header image that you have, and then it would bring me to these like obscure Reddits with these like 19 or like 1800s political cartoons and all this stuff, which actually were like
incredible.
Yes. Yeah. So what has been your experience with those? And for those people who don't really know what I'm talking about here, it's basically like, I'm sure you've seen them where they're, these super elaborate and actually quite witty cartoons that are, they're 10x more detailed than, and more thought that goes into like a New Yorker cartoon of today or something like that.
Like cartoon feels like a disservice to,
right.
But that's what we all call them. But like, these are like full-fledged like paintings that they look like. They're crazy. So I don't know. I was thinking about it the other day because someone asked on Twitter, like, where did this love for these old kind of prints and illustration cartoons come from? And I kind of connected the two this week, where I definitely don't have any of the artistic skill that this ancestor of mine, Frederick Catherwood, had, but like maybe this is the like extremely watered down version, is my love for kind of those types of prints. They're just a great way to, they illustrate so perfectly like moments and concepts, and they're just so much more detailed than anything we have today, which is sad. The one thing I've thought about that is kind of close in terms of detail is, have you seen Silicon Valley, the HBO?
Yeah.
In the intro where they always have this super detailed like
right.
introduction where it's like, and by season it changes, like in some season they introduce like the lift balloon is like crashing against the Uber balloon. Like that, if it was just a still and it was a cartoon, I feel like would be the only equivalent. But that's how detailed like all of these cartoons in the 19th century were. But we just don't have anything like it today.
You don't feel like the memes are basically that version today?
They are, but I mean, I feel like you just can't really compare them, like taking a screenshot from like a movie scene and then putting a meme on top of it. Like, there's some good memes. I love a good meme, but there's no, I don't know. I don't think there's comparison there. But yeah, Puck magazine is the one for people to check out if they want to find all the good ones. Puck and Judge.
Yeah, Puck's the one where they had those illustration, or it was the spy. Those are the ones that I did know. It was like the spy cartoons of different figures like Carnegie. And
I just picked up 4 of his in Georgetown on Wisconsin and P. For some reason, there's like this bookshop like for Bryn Mawr. You might Liberty something, I think. And they advertise old and rare books. So I was like, there. And so I went to check it out last week, and they had all these old prints, and 4 of them were old like 1890s spy Vanity Fair prints of the series that this one was from. It's called like Men of London, and it was just 4 of those types of like cartoonish caricature Vanity Fair prints by that spy guy. And so now I'm going to get those framed. It was a good deal. They're cheap. I got like 4 for $35.
Those are going to be, this is the real life NFTs.
Yeah, exactly.
So before we got started, you were talking about, something that you're kind of obsessing on right now, which is how governments can encourage speculation in productive ways, which doesn't really seem like something that most people would think of in terms of how government would play a role in speculation. So what do you mean by that?
Basically, earlier this summer, I wrote an article talking about railway mania, and the railway, all of 19th century basically was railway mania. So there's not really one specific one, but at the beginning in the US experience of the railway boom, the government was heavily involved in kind of getting the national excitement and speculation going, because interestingly, in 1850, so first, basically, take a step back. First, you get this kind of national excitement around westward expansion, which is kind of the same, I guess you could think about with space exploration today, where it's just like this new frontier, exciting. And there's this concepts that you might all remember from US history classes in high school of manifest destiny, where, it's like America's divine right to expand from sea to shining sea. And so that concept played into Western expansion. And again, it was this exciting new frontier where people could dream of all the possibilities for wealth creation and new exciting opportunities for business, but just life in general, because it was something unknown. And there was this feeling of, we have to do it. It's our manifest destiny to like continue pushing this frontier further west. And then that just really ramped up in 1849 with the California gold rush, when gold was discovered at Sutter's Mill. And then people really had an incentive to go out west because they thought they could go all become millionaires. And so obviously, as people are going west, there's a need for railways to transport things to and from, but also help get people out there, and also for towns that had a railway come through them, or even just plots of land where a town didn't exist, but a railway then went through. All these towns and kind of new economies were being built up along these railway tracks. And that had two effects. One was there's an explosion in land speculation. That's like the kind of lesser recognized boom, I guess, during the 19th century, because everyone talks about the railways, but the whole time there's a railway boom, there was a land boom, because railways have to go on land. And so you can equally speculate of, where's the railway going to go? If I can buy this plots of land at like 5 cents an acre, and then a railway comes through and suddenly worth $5 an acre, it's a lot of money. And so in 1851, a little, actually very tall lawyer from Springfield, Illinois, helped broker a deal between, I don't remember which railroad it was, but some Chicago, is probably, I think, the Chicago and Illinois Railroad, and the U.S. government, where he helped get a deal where it was the first, in 1851, first federal land grant given directly to a railroad. So as the United States government, obviously, government owns a ton of land. And as this westward expansion continues, they're getting a lot more land. And so one of the ways that they would raise money is by selling off acres of land. And because the government also wanted to encourage a railway, a national railway network to be built, they would sell off a lot of these lands to railroads specifically. And in 1851, it was this lawyer that helped broker the first direct grant. And obviously, some historians might have picked up on the fact that this young lawyer then became the 16th president of the United States, Abraham Lincoln, who signed into law the Pacific Railroad Act, which set up the Transcontinental Railroad. And I can't remember, I think even in just that Pacific Railroad Act, they granted like 12 million acres of land or something to railroads. And so that, what that allowed these railroads to do, which was important, is that once they got these acres of land, they can immediately sell them and raise money to finance their operations and construction of the railroads. And the other incentive that the government gave the railroads was, for every mile of track you lay, we will pay you, I don't remember what the amount was now, but I want to say it was like $1,600 or something for every mile of track that you lay. And in addition to that, you'll get like 48 acres on alternating plots of land that, again, you can keep or you can sell, whatever. But it was all these ways to basically subsidize the construction of railways. So that gave the kind of people, gave private sector, gave the private sector and a reason to invest in railways and start companies, because they could get all this help from the government, and it would actually dramatically reduce the cost of building and constructing a railway. So that was the incentive for the companies to form. And then on the other side, you had the early railways making money, and investors saw that. And as always, they wanted to chase those returns. And so as there's this wave of new companies starting up and a wave of investors getting really excited about railway investing, then it just made it easier for this kind of to all merge together and explode into like a national railway mania, where people are excited about expanding west and all the possible opportunities of what, a railway coming through this town could do. And there's belief of, if a railway comes through this town, then there's going to be 100,000 settlers that move here. And so I'll buy land here. And then, people would just keep coming in. I think in Kansas during the 1850s, something like 1,000 settlers were coming into like one city in Kansas a day. And this was in 1850, so the population is dramatically smaller. And it was crazy. So the government, though, was the one kind of originally, they're not directly encouraging people to speculate, but they're kind of giving the spark to start the boom and providing incentive for private investment by saying, if you construct these railroads, then we will give you these grants and subsidies. And by doing that, that encouraged people to form companies, which they would then list their shares on the stock exchange. And then investors who were all excited about railways could then easily invest in them. So I think and again, that's because the government wanted a national railway network. And so they gave the incentives, and then the kind of human nature took over and solved the rest, because we always love to speculate, and exciting new technologies and transportation vehicles tend to be our favorite speculative asset. And so I think that today, I don't know what the equivalent of the National Railway Network today would be. My first thought is something around climate change. And I think, interestingly, going back to what year is it? Like COVID 2021. Earlier this year, I can't even remember now if it was 2020 or 2021, whenever all of the EV stuff really started with Nikola. I think that was 2020. But I feel like that showed how investors could get excited about something like a transportation boom, but in EVs instead of railways. And I think it also showed that for people who are skeptical of ESG, which I think there's, a lot of sketchy ESG and people just rebranding with some same presentation decks with a couple leaves on it and calling themselves ESG investors. I think it showed that investors will just go where they think they can make money. And if it's in something that will eventually benefit the environment, and that being electric vehicles, then they're not going to not invest in it, because, they think we actually don't need to worry about climate change, et cetera. It's like investors just want to make money and speculate. And so if you just figure out ways to divert that speculative activity into something like EVs, and it's been shown time and time and again with the amount of SPAC deals involving EVs over the last 2 years, you can channel that energy into something that may end up benefiting society through lower carbon emissions, et cetera. And the problem, though, I think where this breaks down is that in the 1800s with the railway mania, it was very easy to list shares on the exchange and then get investors. There was nothing really blocking that transaction. But today, so much of the innovation and exciting and sexy investments, especially today, it's all like tech companies, where in that day it was transportation companies, railways. It's almost all happening in the private sector. And by the time they go public, they're big names already. So it's not really kind of getting in at that ground stage because of accredited investor rules. And so I think that's what, if the government was going to do something similar like with the railway mania by providing the incentives, they also have to kind of reduce the regulation around who can invest in these companies, because if you don't allow the kind of average investor to get involved, then you're not enabling that kind of speculation that allows something to really take off and like reach full velocity, because it's just going to be confined to a small group of accredited investors in private markets. You can't really, and that's why I think SPACs like exploded so much, is because it was the first time that investors could really feel that type of venture capital tech style of investing that they've been on the sidelines for and watched happen for the last like 20 years.
And all of that is it is incredibly interesting. It's no, that's exactly, believe me, the listeners are tuning in for you here, not me. So I think the interesting part there is just the reframing of a government policy to actually harness the power of what is usually thought of as nefarious or almost immoral. Like speculation does not have a great connotation, right? But to put it in the context of like, this is just human nature, and you can harness it and direct it into something that is productive, is actually incredibly powerful, in my opinion.
And to be fair, like to be clear, there's going to be like a ton of fraud and a ton of bad things that happen in whatever mania we might get. Like, does not say that the railway mania was actually just an all around 100% productive. Everything was great. All the companies, like there was so much sketchy activity,
Right.
et cetera. But that just is like, you kind of, even without manias, there's always fraud going on.
Yeah. Who are the two brothers from Cleveland? I'm from Cleveland, but Vanderbilt? No, not there are two brothers who ran some company, a railroad company, and I think they ended up going bankrupt, but Van Swin, maybe it's
oh, this sounds like vaguely familiar. Swearingen? Yeah, Van Swearingen. I think so. Yeah.
Yeah. Okay. This is them. Yeah. They're from Cleveland, but they, I think, okay. Yeah. So adjusting for inflation, they're pulling this up here. Their holdings in 1929 were valued at $3 billion. And I'm pretty sure they ended up just dying poor because they were basically running like, I think what they were doing is they were raising money. And I know this is from the House of Morgan book is where I'm pulling this from my brain, but they were like using each offering to like pay off the last one.
Yeah.
For the railroads. And therefore like, that's how they got all their money and then had it come collapsing down. But, okay. So we don't have to talk about them, but, that's one for you to write an article on.
Yeah, Cleveland's fascinating because it used to be like the Silicon Valley of the 19th century.
Yeah, so in 1910, I believe it was like the third largest city in America. And actually the Time magazine, so Henry Luce and Britt Hayden, I think was the co-founder, they once they started it, they like almost immediately moved it to Cleveland.
Yeah.
And it's so crazy. Like the first few years, like Time magazine was in Cleveland. It was the place to be.
It really was. There was like all these, I've read a couple articles about like specifically comparing that scene to Silicon Valley and like the startups. I think it was like Brush Electric was like the big kind of tech company of that day. It was like manufacturing, but like they were just churning out patents, and it was talking about like the types of investors. There's like really like, what do you call it? Like an incubator where like Brush Electric had all these like people inside of it that were just focusing on like inventing, and like they were sponsoring them basically. Is fascinating, but I'm taking us off track.
No, I mean, and there's still a street in Cleveland where it's like, I think it's like Millionaires Row, where all of these like old, turn of the century mansions were. It was like the Rockefellers. So yeah, it's actually like, it's got a ton of history, but yeah, let's get back on track here. So you're talking about SPACs and in private finance versus listing companies earlier. Obviously like Amazon and Microsoft, they went public when they had only raised, a few $1 million in comparison with a lot of today's companies. How would you put that into a historical perspective? And then secondly, if you want to talk about SPACs at all, I mean, I'd read that those are not new. In fact, it's actually like a fairly old vehicle for companies to go public in. So how would you put those two in context of today's environment?
I have written about this. Wrote about it like I think almost 2 years ago. So I'm trying to remember. There is I guess I'll find the link and send it to you. You can put it in the show notes.
Okay.
But there's this article I wrote about SPACs and like just the kind of IPO process in general and how it's evolved over time. And I remember this article just having a lot of great charts from like the 1900s and 1800s of like the time from innovation to listing, and how back in the day it used to be a lot shorter, whereas today it's a lot longer. Like, so you think of Uber and how long Uber's been around and how much of a company it's kind of like an evolved company it's turned into in the private markets before going public. And so there's just no way for the average investor to take part in that growth. And so by the time they go public, it's too late. And Michael Mauboussin had a great paper on this that's linked in that same article I wrote. And there's a chart showing kind of the same as like the amount of wealth or the amount of value created in the private market for some of these huge companies over time, like since the 90s. He has Amazon in there and it's much shorter than Uber. I'm trying to think of other big examples in the last few years that have gone public where 10 years ago, that would have been a great time for the average investor to get involved in it, but it's just they're locked out. But this is all happening, this kind of like longer amount of time spent in the private markets before going public. It's also happening at a time when just the amount of public companies are declining over time. I mean, like the Wilshire 5000 has not been the Wilshire 5000 for a long time. And
how many companies is it?
3,500. But in 1974, when it was first like introduced, it had actually 5,000. It's supposed to be the like all American stocks actively traded in the United States, but there's only 3,500 in it now. And so that decline,
what do you
is kind of
attribute
like,
that to? Yeah.
I think it's a lot of what we have already talked about. And then this is always a dangerous game trying to paraphrase a Michael Mauboussin paper. But I would say that's like the biggest part of it. Also, there's like kind of increased regulation and it's more expensive for companies to go public, which is why from the company standpoint, SPACs were more attractive because you can go market faster and cheaper. And I know that regulation has played a big part of it. But so for the average investor, the exciting stuff is in the private markets and you can't access it. And then where you can like invest in the public markets, the number of stocks is just declining the longer you're investing. Like every year, there's just over time fewer and fewer stocks. And so you're just left with like a pretty shitty pool to invest from in terms of trying to get involved with like exciting new opportunities. And so with SPACs, I don't know as much about their origin. I just know that for decades they had like the really scummiest kind of connotation to them. Like I remember when SPACs were first exploding in 2020, my dad walked into a room and they were on CNBC and he just saw SPACs and he was like, those things are so like scammy, and just walked out like because he's been in finance for a couple of decades. But now I guess they're different. So I don't know the intricacies, but I just know back in the day they were like the epitome of, and people still accuse the modern SPACs of this, but like kind of just enriching the people launching the SPACs, but people involved in them like that invest into it usually are left in a worse off position. But for today, going off what I just talking about, the kind of bad pool for investors to be choosing from because of the various things going on, SPACs was kind of the first opportunity for the average investor on Robinhood or whatever to get a kind of feel for that exciting private market venture capital investment, because theoretically it's the exact same concept. There's no company to invest in now, but you give me money and then I'm going to go find an exciting like opportunity and bring this company public. Obviously in a venture capital portfolio, the kind of distribution of returns means that they're going to invest in 50 companies instead of just we're going to bring one company to market. And that's a lot of concentrated risk, but still this kind of just general feeling of being involved in the private markets and getting access to something that you can't already buy yourself is exciting. And so I think that's why there's such an explosion in like excitement and speculation in SPACs, is because for so long, the average retail investor was just kind of barred out from that experience, and SPACs were the first time that they got to kind of dip their toes into that world of investing.
Yeah, I mean, I think the operative piece is probably who is leading the SPAC, right? I mean, if like Ken Langone calls you up and he's like, "Hey, I got a SPAC. What do you think?" Versus if LeBron is leading one, seems a little bit like a better bet. But
you don't think Shaq's SPAC's done well?
I would invest in. I would actually have confidence in him being able to wrangle somebody in that's pretty good. But I mean, so I don't have the specifics in front of me, but like Bill Gurley has done a great job of talking about how, the middleman process of these banks taking these companies public is a lot of times just not in the best interest of the actual company, which is like almost it seems like a pretty big breach if you're in the service business, if you have these like conflicting interests rather. So I mean, it seems like maybe SPACs are like kind of like a way to shoehorn a way to get rid of the middleman. I mean, that's basically like what all of DeFi is about, is like get rid of the middleman. And it kind of feels like if that is to succeed, maybe this is a precursor to that. Okay. So you just came out with a new course, Imperial Finance, A History of Empires, which has an amazing trailer. I mean, anything that is set to Bob O'Reilly and has historical B-roll is going to be a good trailer. So why don't you dive into that? Like what was the impetus for you doing that, and what's kind of like the major takeaway that people should know, going into it, if they want to take the course, or if they're not going to take the course, like what's the kind of overarching theme there?
Yeah, so it's funny you mentioned the music, because it was so divisive. Like half the people I showed it to, actually not even half, but it's just whenever I showed it to someone, it was either their one piece of feedback on that video was maybe change the music, and other people were like, love this music. Like there was no in between. Like people only commented on the music positively or negatively.
so before you get into it, I will say overall, I love the music. I mean, that song is just going to hype me up, but like, I will say there's a couple frames where it's like, I don't know if this should be set to that song.
Yeah.
But overall, I mean, I texted
it to Morgan Housel, and he was like, maybe change the music, like Stalin and Bob O'Reilly don't seem to like blend well. I was like, too late, man. I'm already posting it. It was like 5 minutes before I was going to post it on Twitter, but it's funny. But yeah, so this is the second course I've launched. As you mentioned earlier, the first one was on bubbles, manias, and fraud. And so for both these courses, the kind of idea was, well, I love doing the newsletter and stuff. History is most interesting when there's someone who's good at storytelling, explaining something to you rather than reading it. I feel like people who don't like history and people who love history, both their kind of feelings towards the subject stem from either having a really good history teacher in high school or college, and that's for the people who love history, and people who hate it generally just had bad teachers that kind of just made you think history was all names and dates. Because like when people say that to me, like, what's interesting about history is just like memorizing names and dates. It's like, dude, literally everything that happened before this second that we're speaking right now is history. So if you're just saying that all of that is boring, like how egotistical like can you be? That just nothing before this moment was interesting. Like it's all just stories, it's history. And so that was the kind of idea behind just doing these courses in general. And so the first one was bubbles, manias, and fraud. In each course, the first one, there were 7 outside lecturers who come from a mix of academic and professional investing backgrounds. So William Getzman, who's like the godfather of financial history at Yale. Like if I ever think I've come up with something original, I'll Google it. And he's already written a paper about it in like 1994. And he did a lecture on the South Sea bubble. He's like probably the world's foremost expert on it. And then from the non-academic background, Jim Chanos, obviously like the world's most famous short seller, did an incredible lecture on basically all of his greatest shorts in his career. and including the ones that did not work out. So I guess not greatest, but like his most high profile ones or high profile examples of fraud, starting with his very first short in 1983. And he kind of walks through in each case why he was kind of tipped off, or like what piqued his interest in this company, made him question their business, etc. And then, so yeah, there's a bunch of examples. There's a really good lecture on railway mania, etc. And after that, and after I launched that, it was, to my pleasant surprise, like a much bigger hit than I thought it was going to be. I think there are well over 700 students now enrolled in that course. And so from there, I kind of realized I should probably keep doing these. And so I started thinking about the second course. And so the second course, before I posted the first one of those ideas that you kind of throw out on Twitter to see if anyone would want like a course. And sometimes you throw those out and there's like 2 responses and you don't, but this was one where like I just threw out considering organizing a course with outside speakers, and within like an hour it was at like 1,000 favorites, like 200 replies. Like so it's like, yeah, all right, I got to do this. And so after I launched the first course, I went back to that original tweet and was kind of looking through at what people suggested, and someone suggested the financial history of empires, and like that was one that a lot of people seemed to like. And the more I thought about it, it seemed like a really good concept, because just in general the kind of rise and demise of empires is interesting, but there's not ever really as much focus on the financial side of it. And how, I mean, empire, it's really crazy when you think about it, how empires can just exist in the first place. Like just the operational kind of logistics of building and sustaining an empire for any amount of time is crazy. And then you start thinking about, well, how do they even finance that empire? And, once you are an empire, how can you leverage that kind of power that you wield financially? And so there's so many interesting kind of angles to that. And so this course is called Imperial Finance, a History of Empires. And we have a really exciting lineup. Probably the world's foremost expert on financial history and empires is Neil Ferguson, and he does an incredible 45-minute lecture, and then he and I do Q&A for 15 minutes about the cycles of empire and how financial innovation is often the driver of the formation of empires. So he talks about how the British Empire was possible because of the Industrial Revolution, which was possible because of financial innovations, and specifically Britain's debt market in the 18th century, which just really allowed it to become a powerhouse. And he talks about the dollar empire, and people have been predicting the decline of the dollar for decades and haven't been right. And he kind of talks about how our growth compares to the British Empire's experience, where they obviously have faded now, but for a time they were the empire, sun never sets. And kind of compares about the trajectory of their experience with debt, et cetera, and how that compares with the US, and then the role of China and how that might kind of escalate. And that's interesting. And then Mark Andreessen did an hour-long chat with me about, he's really passionate about pirates, which is interesting. And so that was,
I'm sorry, about what?
Pirates.
Oh, pirates.
Yeah.
Okay.
So he and I had like briefly DM'd over Twitter like 2 years ago about I can't remember, he was watching a show called Black Sails, which I think was like on Stars or something, or Showtime, and it was loosely like historically accurate, but it was all about this like kind of golden age of piracy and these pirates like establishing a free state in the Bahamas. But in general, just pirates, he talks about in this lecture, they're like the anti-empire. So they're an interesting angle for this course, because the Navy would be the empire, because they're literally representing the empire, like the British Navy. And then pirates are fighting the empire. And so for him, the obvious parallel is startups are pirates. He says, I'm a VC. My day job is basically to fund the pirates.
Yeah, I mean, the American Navy is a product of the pirates in the Barbary States, which is now like the Horn and northern part of Africa. It was like basically like our ships keep getting attacked by pirates. Like we need to form a navy.
Yeah, exactly. So it's like all comes back. And what's really interesting, which he goes in a lot of detail on, like how similar the kind of models were for pirates and equity funded startups today, and how like the literal like incentive, like the economics of the two models were so similar, where I can't remember the specifics, but I mean, every pirate like on a ship, it was all an equity incentive model. It was like they all split the share of the profits, except for like profits being what they raided from another ship. But I think like unless only the captain and the quartermaster got more of a share than the rest of the crew. And so it's like startups today with options and stuff, like the reason that you're still working there is because you believe in the founder. He's talked about like in that case, like the captain, et cetera, but also because of the equity incentive, like the harder you work and you go raid the ship, then you can make more money. And we talked about the fact that a lot of people in the Navy actually like defected to join pirates because in the Navy they made no money. But then, so there's just kind of a lot of interesting parallels there. There's a really good lecture on Weimar hyperinflation, because obviously the Germans' experience in World War I and their empire there kind of directly led to Treaty of Versailles and Weimar hyperinflation, which then led to the rise of Hitler and the Third Reich. So that's a topical discussion point because of all the inflation today. But
right, and I know that you've written a separate piece about that. So I would love to dig into that and what you see as like the historical comparison from then to now, because I do feel like that's it's that argument is almost a embodiment of the normal distribution meme.
Yeah,
where it's the really dumb people are like, we're Weimar, Germany, yeah. And people at the top are like, no, it's different because of this reason. And then on the other, the smartest people are like, no, that's where we're at. So
yeah.
What do you think?
So what was interesting about that is the person that taught that lecture in my course actually taught me when I was at King's College London doing history. He's like a professor there, and I took his class in the German interwar economy. So it's cool to get him to do this. And he's the expert, so I just go with what he says and from what I remember from my college days with him. But essentially, I don't think there's parallels today. I just feel like you kind of alluded to, it's usually gold bugs and like just the perpetual bears and doom mongers, where it's like every time there's kind of any inflation or anything, or the government's printing a lot of money, they just are like, Weimar, dude, it's coming. Like, this is exactly how it went. And it's just like one of those things. Same goes for the Tulip Bubble, which is one of my kind of real pet peeves, because it wasn't a bubble. I mean, it was a bubble, but it was not anywhere to the extent that people believe it was. It's kind of all fabricated. But whenever,
big game of telephone,
basically. So the quick version is Charles McKay's book, Extraordinary Delusions, or whatever it's called, popular, blanking on the title for some reason, but Charles McKay's book, Popular Delusions and the Madness of Crowds. He based his source work on the Tulip Bubble from this 18th century German author who had based all of his source work on the tulip mania from these satirical pamphlets written during the time of tulip mania about the tulips. But to go back to what we were talking about earlier and like memes today, it would be as if 400 years from or 200 years from now, someone came and looked at like Ramp Capital or, Liquidity's like pages and thought that everything there was like actual fact, and as if it was reported from Bloomberg, because all these pamphlets basically in society at that time, the people like the wealthy elite in Holland and Amsterdam did not like the fact that there were people that they considered below them getting rich from the flower trade, because there was like a tulip trade. It's not to say like people never bought and traded tulips, but there were some people making a lot of money from them. And in that time, like society was very stratified, and so people at the top did not like that there were people they considered below them like rising up the ranks through what they considered to be like not respectable means, and that being the flower and tulip trade. And so as people started buying and selling them more, they put out all these pamphlets talking about people like trading tulips at the tavern all day and getting like drunk and leaving their families at home to like starve without food because they're blowing all their money at the bar on tulips, and like stories of people drowning themselves in the river, in the canals, because they went bankrupt trading tulips. But like those were all exaggerated satirical pamphlets. It's not even satirical, but just propaganda essentially designed to turn the public against the tulip trade, because these wealthy people that were funding these pamphlets didn't want this trade to continue. But then the people who did the work, like that German author who then Charles Mackay based his work off of, took those pamphlets and was like, this all really happened.
I mean, I'm really glad we dug into this, because there are so many actual examples. Like there are so many corollaries of this where we have like popular narratives and what are really just myths that are based off of the secondhand account and the big game of telephone. I don't know if you've read Narrative Economics by Robert Schiller. He talks about this. Great book. And if you want the short version, he did come on the pod a few months ago.
Wow,
so
nice.
But he talks about this a lot, even in like political history. There's a ton of this, and it's just like, if there's one thing that I like tell people, when dealing with any narrative, it's like always go to the source material, because something's been changed. Even if it's like a slightest bit. But
it was funny. Some guy DM'd me on Twitter the other day. It was so weird, but he was basically like, should I take your course? Like, is there anything new I would learn? And he's like saying it from a standpoint of like, I know everything. So like, could I possibly, I looked at his Twitter and it's like, you're like 22 and you just got your first job in finance. Like, I'm pretty sure you could learn still. Like, there's something out there for you to still learn. Like, you haven't mastered it all.
Right.
And then he responded something about like, I mean, I know history, like I could probably write an essay on Tulip Mania if I wanted to. And I was like, what do you think about Charles Mackay's book? And he was like, it's really good. I mean, he obviously knows more than me. And then I was like, actually, and like that was my like, see, you could learn more, but like everyone just takes this book as like gospel. And every time there's speculation in anything today, everyone on the media is like, tulips, it's tulips again, like Bitcoin in 2017.
So the like, you can always learn more. This is why I personally love history and I almost exclusively read history books, which, I've gotten into this debate with people about like fiction versus nonfiction, which in the end, it's like you have a finite amount of time and then you just triage. And like, I always end up with history books like on the top of the list. But it's just the more and more history, it's like a linear relationship. The more and more history you consume, the more and more you realize like, I actually don't know anything. And it's just like super humbling. And the thing that I love about Investor Amnesia is that like specifically in business, there are all these lessons that are both human and a product of business environments that you can actually learn to cut the line on making mistakes, right? It's like people have done these things in the past, they've made the mistakes, and also, how are people successful in the past? So that's why, that's why I like Investor Amnesia. That's why I like reading business history. Political and world history is a little bit different in the application, but yeah, it's super humbling the more history you learn.
Definitely. That was the way at the start of my conversation for the course with Mark Andreessen, I asked him like why he originally got into history, whether he's always been into it. And his answer I found was really interesting and kind of similar to yours. Was he said, just from a very practical perspective, like I could either try and do everything, kind of like every idea I have, I can go from there and just try and do it all myself without kind of studying how people in the past have done it. Or I can read history and read all of the ways that people in the past had failed or succeeded, and then use that to inform how I do similar things today. Like if I want to do something, and obviously it's not like I want to start a software company doing this, I can't look to the 1800s to see how a software company in the 1800s, but just like thematically these kind of ideas, and like you can just go back and look at how people in the past have handled similar situations and like famous examples, and just see what went wrong there and what kind of repeatedly goes wrong. And then you can just apply that today and think, I should probably not do that. Like,
right. I mean, so I worked at I worked at DoorDash, and a great corollary here is, Sequoia invested in DoorDash like pretty early on, and they also invested in Instacart. But in the early 2000s, during the first .com, they were the lead investors in Webvan. And had they not made that investment and like learned from that, and I don't know this, like I haven't talked to anybody about this. I just am connecting the dots here as we in real time. I assume that they have like they learned, okay, like here was what was wrong back then. Like what was the, really it was the fact that people didn't have phones and like the speed of internet. And a lot of those technological advances like played into being the unlock of allowing DoorDash and Instacart to succeed. But had they not done that, they probably wouldn't have been able to connect the dots themselves and understand like, okay, here's what needed to change. Exactly. So like that, exactly what you're talking about, like practical application. But okay, so I know we need to wrap up here. I feel like we could keep going for a while, but any closing thoughts on I know we kind of got sidetracked from the inflation conversation, but anything that you want to point out from Investor Amnesia, like any closing thoughts here for the audience?
So I think that people who might be skeptical of the like practical use of history, the analogy that I'll leave them with that I find useful is, I feel like a lot of people think, and I always cringe when I see it, that if you study the 1929 crash, then you can find the identical like modern instance of that. And people who like overlay charts, like look how the Dow traded in 1929 versus like look at this S&P 500 chart over the last like 3 weeks. It's the same, bro. Like that's not like how you use financial history. And so the analogy that I like to use is a compass versus a like GPS system. So people who think that those kind of chart overlay approach, that's like the GPS, where they treat history as if it's like it's a map or GPS system, and if you just kind of load that like up, then you can know exactly when to turn left, when to turn right, when you arrive here, like everything is like laid out for you, which is obviously not the case, because even though I hate this saying now because of just how much I hear it, but like the history doesn't repeat, but it always rhymes. So like it's not going to be the same navigation route every time you take it. But with a compass, you can use history as a compass to at least point yourself in the right direction. So, you look at history, there are a lot of common themes during speculative manias and bubbles and crashes and what happens during those kind of run-ups and eventual busts. And so during times of speculation, you can at least, using history as a guide, make sure that you're pointing yourself north when you should be north instead of facing south, and leaving yourself more exposed than if you had kind of been able to use history as a guide to steer you in the right direction. Doesn't mean you're going to make a ton of money and always be successful, but you can at least kind of make sure you're going the right way.
I love that, to be directionally correct. Let me ask you one more thing. How do you feel about that the notion that history is the data set for all ideas?
That's good. I like that. I'm going to steal that.
There you go. All right, Jamie, thanks for coming on.
Oh, sorry. One last thing I would say is if anyone who wants to check out the course, if you hit History Rhymes at the checkout, it's 10% off. Last thing I forgot.
History Rhymes at the checkout. That's investoramnesia.com. And also, where can people find you online as well if they just want to follow along?
Twitter at Investor Amnesia. And newsletter, you can sign up if you go to investoramnesia.com. If you go to investoramnesia.com, you'll see the 2 courses in the nav bar, the Bubbles, Manias, Fraud, and the Imperial Finance. But both are great, and I encourage everyone to check out both of them.
Awesome. And I will put all of that in the show notes. So thanks, Jamie.
Awesome. Thanks so much, man.